Deux. Hi, everybody. Thank you very much to join us.
Background, 15 years in capital markets, fixed income, 8 years in capital markets, fixed income, 8 years in blockchain and AI. So this is a blessing in disguise, really, because I'm quite holistic in my views of alternative investments.
Thank you, Silvana.
Good afternoon, everybody. My name's Amadeep Tandy, and I'm the head of digital assets at JTC Group. If you haven't heard of JTC, we're a FTSE 250 company in the UK. And we're one of the largest fund administration, fiduciary, and trust corporate service providers. So we're one of, I would say, a specialist company that really supports family or very complex wealth structures. And I would say really what we're known for is some of the really spicy kind of out there wealth structures and how to manage them effectively. Before JTC, I was at Chainalysis, where I was the head of regulation and compliance across Europe, Middle East, and Africa. Thank you.
Thank you, Amadi. Joe?
Thanks, Xavier, and very happy to be here. Thank you, everyone. My name is Jeff McAllister, and I'm founding MyPool. MyPool is a mortgage investment pools. We are tokenizing and fractionalizing mortgages and building primary mortgage origination on-chain. Before MyPool, I was a chief risk officer at an exchange, and before that, I was head of Hex Trust Markets. And looking forward to the chat.
Thank you, everybody. And myself, my name is Xavier Gomez, and I'm Chief Operating Officer of Vancelian. Vancelian is a French fintech solution provide wealth management service powered by blockchain technology and digital asset. And we plan to open an office in Abu Dhabi and Dubai, and of course we are live in France, in Europe, with a MiCA license soon. Thank you everybody for your introduction. Let's start. According to you, today, what are the main driver behind the convergence of traditional finance and alternative investments, such as digital asset, tokenized asset, and for family office and wealth management?
Correct, yeah. So I think when you look at the convergence, I think there's a couple of things that have really come about that's really, I think, sped up that convergence. And I think one, quite candidly, is fear from TradFi. I think another part really is around some of the real world problems that have actually been solved, using blockchain technology and crypto assets. Some of that being, for example, the combating of hyperinflation. So we've heard today from some of the previous panels that Brazil, for example, and some of the other countries where there is significant hyperinflation, there's a huge uptake in actual people using stablecoins, for example. And that's created that general narrative. And I think this is something that has opened the eyes, changed the narrative. I think, obviously, looking back the last 5-6 years, there was a very much negative narrative when we talk about crypto assets, blockchain technology, and so forth. And I think now that narrative has really changed. And we've seen that in the formation of clear, robust regulatory frameworks here in this region, for example, but then also globally. The development hasn't been, without its challenges. And I think it's going to take some time to get there, but we've made some really good developments, I would say, as a foundation.
I would say capital wants, though actually yearns, for yield, access and transparency. Now guess what? We have a mature technology to deliver all of it at once, right? So I think family offices are quite pragmatic, and they finally see capital in its digital form, basically.
Sure.
Yeah, so in terms of what's driving the convergence of digital assets and traditional, I think the regulation space is very key. Obviously, going all the way back to the ETFs that were approved in the US, some time ago now, but like early last year. But as well as obviously the regulations coming on board in the US and so on. So that sort of maturity and adoption that's happening globally is I think driving the adoption from family offices to start looking at it and looking at alternative assets and now considering digital assets in that mix. I think that's probably the key. I mean, the technology solutions that are there obviously have matured, but suddenly now it's, crypto is not such a dirty word anymore.
Thank you. Anna, please. Could you introduce yourself quickly because you are a little bit late and.
Yes. So thank you so much for introducing me, and I would like to share with you a little bit to start with about my background and my family. So my name is Countessina Anna De Bacci. I represent the De Bacci noble family, which goes back actually to 13th century Italy. So we have some wonderful heritage and incredible ancestors in our history. Now we are at the helm of De Bacci Capital, which is the venture network and also investment platform. We connect over 50,000 members globally, focusing on our family offices, venture capital firms, private equity funds, and also, of course, our incredible entrepreneurs and visionaries who bring impact-driven and legacy-based projects into our portfolio. So our mission is to bridge traditional finance with new generation opportunities, from venture capital, private equity, to digital and tokenized assets. So this is about me.
Thank you. Most of investors, in particular in wealth management and family office, see in a digital asset an opportunity, and some of them see also a risk. What is your position on that? And we know this blockchain technology and digital asset is the future of finance and be a good investment opportunity. How do you manage the pros and cons on that to convince ultra net worths to invest on digital assets?
I think digital assets would operate when the traditional markets failed, right, in a way. But I say it cautiously because obviously we need not to forget about the past. History does repeat itself. And we're going to speak about it, but the failure of the case of FTX, right, is one of them. But so a lot of people forget that what happened with FTX, it's also a fraud. And a fraud can happen in any industry because a lot of people got cold feet after what happened, but at the end of the day, again, it happens in any single industry. So there is a lot of lessons learned from the traditional finance to be provided to the digital asset world, and a lot of happening in the digital world that traditional finance needs to benefit from.
The funny thing is, as you mentioned, digital asset is based on blockchain technology. Blockchain technology push the transparency, and the example of FTX is a little bit challenging to understand for an early adopter, because they want to win, but they don't want to lose, and they don't understand exactly how to take the risk and to make the evaluation. This is a challenge.
Don't forget that FTX has been a massive blow-up to the psychology of the whole industry, right? Nobody was expecting that. It was our Lehman moment, right?
Yeah,
so.
Exactly.
Yeah, I think it's a really interesting question. I think my perspective on specifically FTX and a few other roadblocks that we've had in the adoption is that when you look at that incident, it was a prudential failure, right? There was regulatory compliance lapses throughout the whole operation. And when you look back further beyond that, that's not something that is dissimilar to what happened in any of the financial collapses that we've seen. You know, Lehman Brothers and so forth. There's certain measures that have been missed through the process. I don't blame blockchain technology or digital assets for that incident. It's a fundamental lack of, you know, standard compliance practices that were missed, I would say, in that example. Now, when we talk about the risks and how you manage those risks, when I speak to banks or, you know, TradFi institutions of all varieties, it's all about breaking down those risks. If you don't understand the technology, then it's very difficult to understand where there could potentially be emerging risks. So first, it's understanding how the technology works. It's understanding exactly what your client or customer is doing. From an investment perspective, it's actually understanding, is this entity that I'm about to place my money or my trust into regulated? In the early days, there was a lot of gray areas, and I think what we've seen now develop is that we've got at least a foundation level of regulatory frameworks in place across most of the mature traditional financial markets globally, right? It's not perfect by any means, but we do have a foundation. So when looking at investments in any capacity, whether it's crypto, whether it's traditional markets, you're going to understand whether or not the entity or the counterparty is financially regulated. That's number one. If they're not, why not? Is there something that you're missing? I think when I speak to family offices, for example, and they're looking to invest, you know, smaller volumes to large volumes, we start with the simple things. And the simple things actually are very, very common in the TradFi space. There's only a small piece of the puzzle really that is specifically blockchain or crypto related in terms of the risk. And typically we don't actually come across those, because when you're talking about investment or institutional investment, you're talking about safe, modest plays, not going into the deep end of DeFi, for example. We're talking about Bitcoin and Ethereum exposure, and we're talking about institutional exposure in institutionally regulated custodian environments, for example. So breaking it down step by step, managing the risk is where, you know, we are starting really in this space.
Mardeep, you mentioned regulation, and you are a great specialist on that.